Good afternoon, traders. I hope you can hear me. Hope you can see me. Welcome to today's Admirals webinar. Great to have you all here. What we're going to be talking about today is kind of an interesting subject, namely scalping the GBP on the 1 minute chart primarily. So it's an interesting subject, something we can talk about for hours, days, maybe even weeks. It's got so much on, but anyway, we've got plenty to cover today. Great to see that so many people here already joining us and stuff. Great to see you here, Vincenzo, Blondodo, Tina. Fantastic to hear. Thank you. Super, and lots of other people there. If you're joining us live or if you're watching this later, okay, on the Admirals YouTube channel, then be sure to make sure you subscribe to the Admirals YouTube channel. And if you find this useful, give us a thumbs up. Great to hear. So good, fantastic, great to have you here. Okay, there. It's as always, you're all very welcome. As I always say, I appreciate here on the Admirals webinars we have not only we have a wide range of experience from complete beginners to very advanced traders, but also we have a completely global audience. So wherever you're joining us from, all right, around the globe, you are very welcome, and it is great to see you here. Bando, fantastic, super to have you here today as well. There's lots of people coming in. Sergey, Sigurd, Douglas, super, really great to see you all here. Really, you are very, very welcome. So why don't I bring up the slides, ladies and gentlemen? Joanna, great, super. Nice to have you here, and we'll have a look at today's topic about scalping the GBP on 1 minute. So just bear with me, just as I do a bit of work here. Bring up the slides for us. Just if you'd be just good enough to bear with us there. There we go. As always, got plenty going on, especially because it's been. Has of course been the NFP numbers as well this afternoon. So lots going on in the market, which we'll have a look at. Hopefully we'll have time to have a quick look at the live markets. Okay, it's been a rather interesting. Well, it's been an interesting day in what has been also a rather interesting week. Okay, and an end of the month was good, and the start of the month has been interesting as well. But anyway, listen, let's talk about scalping GBP on the 1 minute chart. Let's talk about the kind of ways to do it. As I said, I appreciate we have a broad range of experiences, so I am going to be focusing a lot on for completely new traders to try and help them, give them a little bit of insight, but also there'll be a few little nuggets in there for the experienced trader to take on board and work with. As always, it's fantastic. As I said, we've got great numbers here today, this afternoon. It'd be fantastic to know what, if any, experience you have of scalping GBP or scalping in particular. How have you found it as an experience? Have you found it suitable for you, or have you found it challenging? Okay, there's no judgment here. Okay, it's not for everybody. All right, but it is a case of good to hear what other people's experiences are, whether the good, the bad, or the ugly. Okay, because I think we can all learn from that. It's great to hear completely new traders, to hear different perspectives from different traders. So if you have experience of scalping, it'd be great to hear what yours has been. Philibert, you're fantastic. Great to see you here. Okay, great to see such a happy crowd, clearly, for a Friday afternoon. So remember, ladies and gentlemen, here we are, Admirals, okay, a Forex and CFD broker with global presence but local support, licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular trading products and allowing the opportunity to engage with markets using both the MT4 and MT5 platform. If you have any questions about Admirals, get in touch with your account representative and they'll be very happy to help guide you. You can also, as I just said there, subscribe to the Admirals YouTube channel there, okay, which there is a plethora, an absolute veritable smorgasbord of fabulous videos there from not only myself, but also my colleagues, Marcus and Jens, okay, covering pretty much all sorts of topics when it comes to trading. You can subscribe to that at Admirals Global. Make sure you do some fantastic stuff on there. And some of the elements that I will touch on today, there are deeper videos in there that actually explain some of those particular concepts. So as I said, if you've not subscribed, make sure you do. And you can also listen to some fundamental analysis, okay, by Admirals analysts, okay. You can listen to that on the Admiral Markets podcast. Go onto the Admiral Markets website, you'll be able to pick it up there, Admiral Markets Global there. So there's always something useful and interesting, just to give you a little bit of an insight into the markets from a fundamental take. And finally, you might want to have a little look at Stereo Trader, which, as the thing says, is a MetaTrader trading panel with unique functions that enable smoother, more controlled trades. Put that slide in today because anything that can help you, all right, with scalping markets is invariably, very, very useful. So be sure to go on to the Admirals site, download Stereo Trader and take a look at it. I think you might find that it could be quite a useful little tool for when you're coming to do some scalping yourself. Okay, so I think a couple of people just had maybe a little bit of problems with the sound. Hopefully, it did. It looks like I've done my tests and checks, okay, and everything seems okay. If hopefully you can all hear me, because what I want to talk about today is, well, I'm going to talk about scalping. I'm going to talk about the GBP. I'm going to talk about why we look at particularly to scalp the GBP. And I'm going to sort of try and talk about what you need to be aware of. All right. As I said, scalping isn't for everybody, it can be quite an intense activity, and so you need to be aware of what's important to take on board, and not unsurprisingly how can we do it successfully. And I will provide a very simple scalping method that you can take away, just very, very simple for aimed at folks that new traders who just make it kind of simple in terms of what to look for and how to execute, because as I said, scalping isn't for everyone. It can be intense, and so actually just a very little simple method that you could take away to basically look at scalping on the 1 minute chart might help you with that. So for those who don't know me, my name's Paul. I've traded for many years, okay, traded to hedge funds and high net worth clients. When I traded for hedge funds, I was primarily an intraday trader on FX markets, looking specifically, most of my trades was on sterling. FX indices and commodities is where my own particular focus goes. And actually I'm a trend trader for longer term traders, but generally, okay, for my own style, for intraday trading, I'd like to be a reversal trader or a mean reversion, and we'll touch on an element of that today as we go deeper into our session. So let's crack on, okay? Let's kick in. As I said, let us know what, if any, scalping experience you've had yourself. How have you found it? Okay, it's as I said, I think it's great for people to be able to share their experience. Certainly no judgment from me, okay? It is we're all traders here together, okay? We can all actually help and learn and support each other. And as the slide says there, due to the nature of London remaining the world's #1 location for foreign exchange trading, there remains a lot of interest in trading the Great British Pound Sterling. And we did a session on this, I think a few months back, about trading GBP in particular. But what we'll look at today is we're going to help shed a few lights on specific traits that traders take into consideration when scalping the GBP on the 1 minute chart. So in this session, we're going to discuss scalping the GBP, and what traders need to be aware of when engaging with GBP in their own trading endeavors. So it's as I said, the vast majority of my trading is actually GBP. I do cover quite a few instruments. Okay, as I said, FX indices, commodities tend to be my sort of bread and butter, but I've still always I started literally trading on pound against US dollar, and and it's still there, okay, all these years later and stuff, and being able to love it and watch it. And well, as I said, I'll give you a little bit of my own kind of insight on terms of on scalping and shorter term intraday trading. All right, I'll pass on a few nuggets and stuff from my own experiences, and actually how I look to it. And as I said, I'm going to give you just a very simple little 1 minute scalping method that you can take away to look at and practice yourselves. So, as I said, let's look at scalping first, and in particular, let's have a little look at the pros and cons of scalping, because I'm always very I'm very cognizant of the fact that all sorts of trading styles are not for everybody. Actually, what tends to happen is that people tend to have their most experience, their most sort of kind of success when they trade in a way that is in line with their own personality behaviors. So some people, actually trading monthly charts is the best thing for them. For them, who they are, their lifestyle. Other people, are better at trading the kind of, let's say, the sort of shorter, more intense, aggressive, sort of time frames when you're looking at scalping, where you might actually only just be trading off 1 minute charts, and your trades may be only open for a couple of minutes, okay, and maybe only look at a very small time particular profits, okay. So there's pros and cons to everything, and in terms of pros, what we find is scalping lends itself to most markets, all right. And that is useful, and we're going to come on to why that is useful in another slide or two. The truth is, you can scalp at any time because you're actually just looking, to sort of trade very, very short time frames. You can scalp at any time, but that doesn't mean that there aren't better windows for you to do it, which we'll touch on a little bit. But scalping does mean that it's feasible for part-time traders. So maybe you're a part-time trader and you're looking to trade around your day job. What also helps is, is your time exposure is limited. As I said, you might only have a position open for like 2 minutes to 20 minutes per se, which if you're trading through, let's say, volatile times, maybe through a crisis, that can actually be more beneficial to you because that actually helps you manage your risk exposure. If you're only in the trade for for a short while, that can actually help some traders in terms of basically helping them manage their own risk exposure. My own view is that you've probably heard me banging on about this every single time I come and do a webinar. Is risk management is key. And risk management is actually your number one thing. And it doesn't matter whether you're trading 1 minute charts or 1 monthly chart, or whether you're trading sterling or crypto or indices or whatever. Your risk management has to be key. And you're in scalping, it most certainly does. You most certainly do have to be really sort of quite quite vigilant, quite finessed in how you operate there, because things can happen and things can change very, very fast, as we will actually have a particularly look at. On the downside, okay, it's that it does actually help scalping to be an experienced trader, okay, to have had a little bit of experience, and what I often talk about is, it's kind of traders almost like walking down the kind of time frames, right? Namely, it's a case of maybe starting at something like maybe trading the daily charts in 4 hour, 1 hour, 15, 5, 1, okay, he's kind of taking kind of steps down towards there, right? It's I kind of quite often use the analogy. It's a bit like we can all drive a car, okay. Well, I'm presuming most of you have passed your test and you can drive a car, and you think it's always the same. But if I was to take you and stick you in, let's say the cockpit of a Formula One racing car, people might say, well, it is the same experience, Paul. It's 4 wheels, it's a steering wheel, it's a couple of pedals. But the reality is, from driving your Ford Focus around the village to basically driving a Formula One car at a Formula One race, everything's happening a lot faster. It makes it a much more intense experience. And if you're not really have got the reactions and the training and the experience, it would make it a rather challenging experience, shall we say. So, and scalping is an element like that, okay? From trading, let's say, daily charts to trading and scalping, you might be looking for the same setups. You might actually looking for the same sort of style of trading, but everything's happening much, much faster, okay? And things can turn much quicker. So you need to have, a little bit of experience behind you will help you just to be able to sort of, identify and work with the kind of the intensity of the environment that you're going to find yourself in. Because, as it says there, when a market turns against you, it can be very quick, all right? And that's got nothing to do with you. Just markets they'll turn, they'll change. We'll have a little look at, I think pound Swiss franc was this morning, okay, having a few swings there, okay, and we can have a look at that and how we can learn from that. And that means that your discipline in your execution needs to be key, right? Hence why the little 1 minute scalping strategy I'll share with you, it is relatively simple in terms of the execution, because you know exactly when the trade is there or not, because you can't really have that ambiguity. You can't be sort of sat there umming and ahhing. Oh, I don't know. Is the trade or is it? You need to know the trade is on. I'm in. Here we go. No messing around. And here's another thing is that scalping, you can only really do it for about 1 to 2 hours max. All right. It is a performance activity. Now, I know there might be people watching this who can feel sort of different, say, oh, I can scalp 8 hours all day, no bother, Paul. And, and if you can do it successfully, well, I doff my cap to you, fair play to you. Okay. But the reality is human beings generally tend to perform well for about blocks of about 40, 45 minutes. All right. And, as I said, because things are happening fast and you've got that intensity, trying to have an expectation upon yourself that you could do like, a normal 8-hour day job, or like just scalping markets. I think what you'll find is, you'll struggle, because actually, even though you just think you're sat at a desk pushing, buttons on a mouse, you will find that the intensity of it will wear you down. It will burn you out very quickly. And so actually what you should do is just give yourself 2-hour windows. Just give yourself a 2-hour window. Okay. Now, part of that hopefully would be around when it's the best time to trade those particular instruments, but also equally I understand that it might be windows around your life schedule. Maybe you've got a day job, maybe children you need to take to schools, etc. Okay, you need to sort of find that window that sort of suits and works for you best. So, what can actually sort of come from it, or what do we also need to take on board? Okay, it is important to understand things like liquidity, okay, especially as you kind of grow in size as a trader, and recognize that liquidity is key. Certainly, if you start to think about how an institutional trader is thinking, namely, they want to be able to get their position on without actually the market moving too much for or against them, okay, into particular size. Generally, all right, generally it is a sweeping generalization, I know, but generally, kind of private traders, retail traders, it is not necessarily a massive issue for ourselves, okay, but it is important to understand where it might be an issue for institutional traders, and we'll look at that on the charts in a few slides time. What you also need is a bit of volatility, okay, and that is probably a little bit easier to demonstrate and show when we actually look at some particular charts. It's for a scalp, you need a chart to move for you, but then equally, it's almost like you're looking for a little bit of a kind of like a Goldilocks environment. Okay, you don't want the market too intense and too fast. Equally, you don't want it, too slow and going nowhere. Okay, there's that kind of Goldilocks. You need it just to be just right, and the little strategy I'll share with you will help you identify that. Also, your time frame, which is on 2 levels. One, as I've just said before, your window about when you can actually do this based upon your own particular life experiences. And also just the time frame itself. We're going to focus on 1-minute charts here, but you will find on platforms that might have 2-minute, 3-minute, 5-minute charts. Okay, we've got 1 and 5-minute charts here on the MetaTrader platforms. They can work well together. So even though I'm going to focus on the 1-minute chart, it's still possible to scalp on, let's say, the 5-minute chart. Okay, and that can actually work well together. And we'll talk a little bit about that in a moment. And risk management, you heard me talk about this a couple of slides ago. All right, there is no messing around here. Okay, you really need to understand what you're doing. Really need to know it. You really need to sort of respect it. Okay, because as I said, things could turn against you very, very quickly. More of that later. Also, when we look at scalping, ideally what we want are, for the want of the word, cheap instruments, okay? And what I'm talking about that is generally tighter spreads, right? So, which we will come on to in specifics in that, okay, in a couple of slides time. But generally, there is a cost of business, okay? And if you're scalping and you're taking quite a few trades, well, then basically, and you're only looking to hold trades for maybe a few pips profit. If you have spreads that are, 6, 8, 9, 10 pips, even more wider, well, then that actually starts to count against you. It makes it very, very difficult. You want something that has a good daily range, good average true range, because you want it to move a little bit to give you the opportunity, that little bit of volatility. And also things that, support technical analysis, price action at lower time frames. And certainly GBP will do that. And I'll show you an element of that. What I also want to be aware of is, as always, I like to know, where my things like my major support and resistance are, where the previous day's lows and highs are, and if there are any particular big round numbers. People might say, well, what's the point, Paul, of drawing in support and resistance levels, from the daily chart? Okay, we're just scalping for a few pips. And my reason for that is that, those kind of levels, they become decision points, all right? They become inflection points, and however you particularly wish to label it, they become a point at which the market is probably going to have to make a decision. And you knowing that ahead of time might actually give you the opportunity to prepare yourself to recognize where a market may particularly turn, where it may actually sort of reverse, where it may sort of, continue or accelerate away from. So, even though you're scalping 1 minute charts, okay, recognizing major support and resistance levels is still important to you. So, that's a little bit in about scalping, and it's a case of, what is the GBP? And I appreciate, the majority of people probably do have trading experience, but I also recognize, as I constantly say, we have a very wide range of experience here, and there are people here who are completely new to trading. And GBP, okay, is the Great British Pound. It's the UK's currency, very often known as sterling. It will trade 24/5, okay, but its main hours are 8 till 1400, I guess, 1600, sorry, 4 p.m. And those are the kind of the main hours. What you will find, okay, is that most sterling traders will focus on the early morning European session. More of that a little bit later, okay. That's not to say you can't trade it, and it's not to say you couldn't trade it, overnight, okay. And once again, as I said, I appreciate we have a real geographical location. So, I appreciate you might be joining me here from Indonesia or Buenos Aires or, Hong Kong, etc. It's not to say you couldn't trade GBP within those particular timeframes. It's just that the majority of the sterling business is still focused on that early morning European session, which we'll look at in a particular moment. Yes, Douglas is asking, can I have a recorded one of this particular session? And yes, as my wonderful assistant says, this session is recorded and it will be on the Admirals YouTube channel probably next week and such. So, I appreciate that, I'm always trying to get as much information as I can across to you. So maybe, if English isn't your first language, maybe I speak a little bit fast, but it's because I'm just trying to get as much information across to you as I can in our period. But yes, this video recording will be on the YouTube channel, so be sure to check that out. And in terms of what we looked at in terms of what's good for scalping, what also makes the GBP good for it is that there is volatility within the GBP. Perhaps not as much as there was maybe a year, 2 years ago when we had all the Brexit elements coming on, but there are strong trends. We can get sudden reversals, on an intraday basis. And there is still a good sized average true range. Okay, maybe not as much as like 10 years ago, but there is still a good sized average true range. What also helps us with the GBP is that GBP is sensitive to risk. Okay, and in particular, I would view it as a risk on sentiment currency. Okay, namely that when we have I did a video on this I think a couple of months ago on understanding row risk on risk off. When markets are risk-off sentiment, okay, they tend to race towards the Japanese yen, the Swiss franc, US dollar. When risk is on, we tend to race towards the condols, okay, and also GBP. And fundamentally wise, well, yeah, it used to be driven by a lot by the kind of Brexit and the shenanigans going on around that. Now it's more likely to things like trade deals, okay, and understanding the kind of state of the economy, A, post-Brexit, B, post the kind of the main thrust of the COVID world that we live in now. So if you want to trade GBP, and if you are a completely new trader, GBP trades quite happily against all of those major other FX pairs: dollar, yen, euro, Swiss franc, Aussie, Kiwi, Canadian dollar, and also against other exotic pairs. But what I'm going to show you when it comes to scalping, I kind of like to focus in just a little bit more, and we'll talk about that now. Remember what I said is that, you want to have a good routine, okay? Because things happen fast when it's scalping. If you have a poor routine, if you have poor discipline, the good thing scalping will do is it will expose it, all right? It will expose it. If your routine is poor, if your execution is poor, your discipline is poor, it will effectively, expose it. And, if I can say anything over lots of trading, many years of trading markets is, it rarely exposes it in a good way, okay? It's normally a little bit of it exposes the kind of the weaknesses rather than the strengths, all right? So hence why You heard me talk about it every time. Whenever you open in chart, identify those levels of support resistance on the higher time frames. Look to identify, is there a present trend? There might not be, but if it is, use that. Look to trade with a trend when it's clear. Okay, and you've heard me say it before, good trend will leap off the chart at you. You don't need to force it. And if there is no trend, well, looking to trade reversals or mean reversion for day trades, and we'll come on to that in a moment or two's time. As I said, if there is a clear and present trend, well, then look to trade with it. Okay, even with the scalping. Okay, don't be looking to fight the market. Okay, by all means, you're welcome to fight the market, but it's unlikely that you'll be the winner, ladies and gentlemen. All right, okay, it's it's the big ocean. All right, you're just you think of yourself like a surfer. All right, okay, surfers don't try and fight the ocean because they know that they're going to lose. Right, they'll get crashed against the rocks. What they're looking to do is to identify the good waves to surf. All right, and think of yourself like that in trading style. Okay, if you can find good trends, that's what you're looking for. Trade with the trend when it's clear. Look for nice pullbacks. Okay, you can use price action candlesticks to identify entries. I'll show you one or two elements of that in a couple of slides. Or you can find good breakouts. Some people like to trade breakouts. Some people like to trade pullbacks. Personally, I'm a pullback guy, but I recognize that there will be other people here who like to trade breakouts when they're trading, whether they're scalping or whether they're trading swing or what have you. Okay, but when there is a trend in place for your new traders, don't be fighting it. Okay, just find a place to run with it. And if there is no trend present, well, this is where my kind of experience comes in, that I kind of prefer to look to trade reversals or mean reversions for intraday trades, so intraday down towards scalping. And in particular, I would like to sort of look to trade around things like false breakouts of the Asian range, some very clear reversal patterns. All right, very simple reversal patterns, double tops, triple tops, head and shoulders, wedge patterns, things that would give me reversals and mean reversion trades. Okay, my view is that markets can still be in a trend, but weirdly on an intraday basis, 70 to 80% of the time that the market is mostly range bound, okay, on an intraday basis. And it might, yes, swing left, right, and center. And I think the pound Swiss from today will give us an indication of that. But it's those intraday swings that actually I find that that I can trade. Okay, and that's where I look to focus my own particular efforts on that. Sigurd is asking, what's the time window for the Asian range? Very good question. Okay, I tend to run it from around about sort of 11 o'clock London time through till about 6 a.m., 7 a.m. in the morning, depending upon the particular instrument. Okay, some people think the Asian range is much smaller. Some people would say the Asian range is from about midnight UK time through till maybe 3-4 a.m. in the morning. Personally, and here we go. Let's use these tools whilst we've got them here, ladies and gentlemen. You will see on my charts here. I have these grey boxes. That's what's called an I sessions, right? An I sessions indicator, which is widely available, all right, for the MetaTrader platforms, and you can basically amend that to do it. So what I do is I have it set up to effectively sort of show me that kind of Asian range, so that when I'm looking at the charts at the moment, visually I can very, very quickly and clearly see, what was the Asian range, and see how markets move out and then move back in, they move out, move back in, move out, they move back in. Okay, hopefully you can see that. Or here on the 1 minute euro sterling, it moves out of it, bounces, making a double bottom before it goes to the other side, comes back in, tries to come out again before it goes back in during the morning session. So very good question there, but yeah, that's what I particularly look at. And as I said, the I sessions indicator, if you can find that pretty much widely available, and that can actually help with that. And I'm sure there are other indicators that can plug into both the MetaTrader 4, MetaTrader 5 platform, and that's just the one that I know and use myself. Okay, it's not any better than others. It's just I have it, I use it, it works. It gives me a simple visual representation of what I'm looking for, because as I said, I think 70 to 80% time on an intraday basis, markets are actually mostly range bound. Okay, and so it's the reversal trades and the mean reversion that speak to me, okay, in terms of my particular setups. do all that. So there's a little bit of preamble there, giving you a little bit of insight, okay, into it. But what I thought I'd do is I thought I'd offer, mostly for the new traders, a very simple 1-minute scalping trending setup, okay, as a way to effectively, to get you started in terms of scalping the British pound and how to do it. It is a very simple scalping tactic you can use in the 1-minute chart. As I said earlier, you could also use this on the 5-minute charts as well if particularly looking to start. It's a very visual tactic, okay, and the reason that I'm sharing it that way is because I appreciate there's lots of people here who who might be just very, very new to scalping. Okay, it's a new experience, and so I find a little simple visual tactic to get you started, so there is no ambiguity. All right, that you basically know exactly what you're looking for, and exactly where your entry is, okay, and also where you're getting out if you're wrong, or where you're getting out if the trade goes your way. It is kind of a manual definition of your entries based on a pullback, but I'm going to explain that more in depth in a slide or two. We're looking at manual execution on this. I'm sure people who are smarter than me might be able to algoize that, okay, if that's the way you particularly look at. Good luck with that. It's kind of manual and system exits. All right, what does that actually mean? Is that I've kind of already got set what I'm particularly looking for. It is actually viable for all cheap instruments. I'm putting that in inverted commas. That is what we talked about in terms of small spreads. And to be honest, the smaller the spread, the better. So actually, you'll find for indices and for quite a few of the FX pairs, it works particularly well. In terms of sterling, okay, what I particularly like to look at is pound against US dollar, euro against sterling, pound against yen, and pound against Swiss franc. I will look at pound against Australian dollar, all right, but I find pound Kiwi dollar, pound Canadian dollar don't tend to sort of favor this. Pound New Zealand dollar, can have a good wide spread. Pound Canadian dollar, the spread can be about the same as the Aussie, but it doesn't move. It doesn't have the same kind of volatility that the pound Aussie. So I will keep an eye on the pound Aussie, okay, because the pound Aussie can have a 4 to 6 pip spread depending upon timings, etc., which is it's just getting towards the edge of it, but with pound Aussie, you will get moves. Okay, it does tend to have that kind of volatility that it's worth keeping an eye on. We'll have a little look at it later. But certainly, a pound against US dollar, euro sterling, they have and pound yen these days. Okay, pound yen here on Admirals, it's like a 2 pip spread. All right, okay. I can remember back in the day would it be about 12, could be 12 to 15 pip spread. Okay, which just means you just can't really scalp, with spreads like that. Okay, I mean you can, but it's just a mug's game, foolish thing to do. All right, okay, but he said we want sterling pairs that have a good enough volatility, have enough range, okay, enough movement, okay, spreads are tight enough for us to be able to sort of play that game. So setup is very, very simple. All right, I'm just going to be using price action, fractals, okay, a few EMAs. There are 3 EMAs, okay, the 50, the 100, and the 150 period EMA, and also the 200 SMA, which is normally just on my charts anyway. Hopefully you can see that there on my charts. Let's just show you here. Let's just draw this on, shall we? What we have is, there is the red is the 50. It's kind of like a brown is 100, the purple is 150, and then I have green as 200. There is no significance in the color, there's no requirement for you to use it. There's no special, it's just so I can recognize them. Okay, you can choose whatever colors play well for yourself. Okay, you don't. There's no significance to that. But what we're using it, especially when we're looking at kind of 1 minute, is the 50 gives you the short-term trend, the 100 gives you the medium trend, and the 150, the 200 give you the kind of longer-term trend. Remember, this is the longer-term trend on the 1 minute chart. Okay, so you're really maybe looking at what's going on for the hour, the next hour or so. That's you have to put it into context. So what are we looking for? All right. When we get price above all 3 of those main EMA moving averages, with them being in alignment, we have effectively a bullish market. Think of it like a filter. When we have price below all of the three main moving averages, which are in alignment, well, then we have a bearish market environment, okay? Kind of simple, as I said, things are happening fast. You don't need to complicate it, all right? So, as I said, good trends leap off the chart at you. And when we basically have price above those moving averages, they're in alignment with a bullish environment. So we're just going to be looking for this strategy, we're going to be looking to sort of, to trade bullish ways. And prices below them, okay, we're looking to use that as a bearish filter, okay, and we'll be looking for shorts. Keep it nice and simple. Ideally, and this is just from experiences, we like to see the moving averages moving at about approximately a 45-degree angle. But as you'll know, trading live markets, you rarely get anything perfect, but really anything between 30 and 60 degrees is good. It's that kind of like, let's call it like the Goldilocks zone there, okay? You find if it's a little bit too tight, what happens is, the market's probably just blowing off. If it's too shallow, okay, then invariably there's not a great deal happening. So, between 30 and 60 and ideally 45 degrees, that is perfect, but as I said, that's a little bit of a Goldilocks element. If it's flat like that, if the moving averages, are not in alignment, or if they're all crossed up, then leave it alone. Okay, leave that indicator alone. Because it's a 1 minute chart, you might come back 90 minutes later and find it's completely different. Okay, but don't be an idiot, all right? Okay, when price is doing that, okay, when the moving averages are just flat or they're intertwined, okay, don't force it. There's no need for you to force it, okay? Just basically look at what you have there, okay, and just basically ignore it. Go and find something else, okay, or just just admit that 1 to 2 hour block that you've just looked to focus on, that is just not working for you that time. Welcome to trading, okay? Everybody has to deal with an experience with that. That's the name of the game, right? Just don't force it. There's no need to force it. So for a bullish trade setup, remember we had a look at what the filter was, all right? And once we've established a bullish market environment, we wait for the next step. We need price to take a breather, okay? As it's above the moving averages, and then retrace back into the moving averages. And in particular, we're looking for it to kind of test that area of the kind of 50 and 100 period moving average to confirm we have a strong trend in place. So price has been rallying up. You can see the moving averages are in alignment, and then what happens is the price starts to come down, okay? And when it starts to close the other side of that kind of 50 and get into the particular area between the 50 and 100, and on occasion it may go deeper, but what we find is in a good trend, it gets back into there between the 50 and 100. That is, that's kind of our first that's the first sign that we need to be ready to sort of to get ready to trade. Now, here's where it starts to become interesting for us, because once it's tested its pullback, what we are waiting for is we're waiting for the trend to re-exert itself, okay? You hear me talk about, markets, they surge, they rest, and then they surge. And that's what we're particularly looking for, right? Okay, surge, rest, surge. And this is what we're looking for. It's looking for the trend to re-exert itself. If it doesn't, if it continues down, there's no trade. If it does, then we're just going to use a very simple trigger. Remember I was talking about simple visual triggers. Once price, okay, has closed beneath the 50 period moving average, in my chart, the red, then we wait for price to close back above the 50 period moving average. It might take one candle, it may take several, depends upon, what price action is doing. When it does, when it really recloses here, so basically, it's effectively, we are long, okay? You're entering at market on the close of that candle back above the 50. Remember, on the close of the candle, not just as the candle moves up, you've got to wait for that 1 minute candle to close. So here, you can see price have been doing it. It comes back, all right, it closes there beneath the 50, and then the next candle, it closes back up above the 50. The dominant trend re-exerting itself. We want to be a buyer, okay? That's what we want to be doing. Nice and simple visual for new traders, okay? It's very clear it's either there or it isn't. Once you've entered, then of course we need to manage that trade. It's very clear. Stop loss, okay? What we normally say is, it kind of goes below the recent low or the recent fractal. Okay, in that case, it's kind of simple. We can see what that recent low is. Or, if it's aggressive, okay, if its price has been around it, you can look to put it beneath the low of the last 2 candles. Okay, now what you'll find is that what might happen is that you might have to actually do that manually. You might have to just watch that and be prepared to close the position manually, because it maybe the position is too close and you're not able to get it onto the actual system. That might be required for you. Okay, so just remember that. Okay. And of course, once we've entered, then we need to manage the trade. So when it comes to trading, sterling pairs, what I actually say, remember we're scalping here, is bang, aim for 5 pips, right? Aim for 5 pips to begin with. Just once the trade is on, look to aim for 5 pips, okay? What might happen is if you're a bit more experienced, a bit more advanced, you want to basically, to be a little bit more aggressive. Well, what you might be able to do is aim for about, 3 to 1, all right? 3 to 1 of your trade risk, okay? Which means you're going to have to work that out pretty quickly. For when it's aggressive, you can do that. I also appreciate that some people like to use a trailing stop, all right, because that's what they find it easier. And then with that, we just basically just use a trail beneath the low of the last 3 bars. Every time the candle moves up, you basically just trail your stop beneath the low of the last 3 bars. And I said, because it might only be a few pips, you might still have to do that manually, okay, rather than execute that manually, rather than have it on the platform. But I preferably want to use the platform when and where we can. So yeah, so in this particular example, using a trailing beneath the last low of the 3 bars, well, you can see that actually, basically, every time it closes, price closes, you're doing that until you're taken out. Sometimes that will allow you to capture, a great trend. If there's a real strong thrust, that's absolutely fantastic. Other times, okay, you might get nipped out for a scratch trade, okay, and that, as you'll find, is you'll find that's absolutely fine, okay. That's part of it, is taking scratch trades, okay, just managing your risk when the trade is going to work out for you. On the bearish side, it's exactly the same, only flipped into reverse. You've got those 3 moving averages in alignment: the 50 EMA, 100 and 150 EMA. Price, having been in, here we go. Price having been down beneath those moving averages, it pulls back into that. We've had a surge, getting a rest. We can see it closes, okay, closes there above the 50 period moving average. So it's tested it, and then what we see is that basically, as price basically starts to close right beneath, okay, right beneath the lows of that 50 period moving average, that becomes our particular trigger. So yeah, as we just said there, when price recloses beneath the 50 period moving average, you can see it come back and tested there and came back. There's actually 2 trades there. That's what we're looking for. When we close it, you're going to be shorting at the market, okay, or, to enter a short into that particular to run into that trade. So these are just some examples. Short bearish, price comes up, it rallies. You see here, it doesn't actually close beneath the 50. All right, it's this one here that closed beneath the 50. Your stop, okay, should be above just the high. Remember, this is only a couple of ticks, okay, and actually price moves down a few. It comes back, tests it again before it actually moves down, okay. And in that particular case, yes, your 5 pips is achievable, along with the 3 to 1. Some people will actually try to put both trades on. My suggestion is, if you're completely new to scalping, don't try to do that to begin with. Even if you're just literally scalping 5 pips, okay, you will find yourself that will help you, okay, in terms of the way you look at to work. On the flip side here, this is kind of lots of bullish multiples, because hopefully you can see that when a good trend, you don't need to force it, okay. Price has been up above it, comes back down, closes back above the 50, you're long. Price rallies up, but you can see price never moves in a straight line. It comes back down, it closes beneath the 50, next candle closes back up above the 50, you're long, okay. Here you get a little bit scratched, there you're back above it with your once your prices come beneath it, and it double bottomed before it moves up, pulls back here. Actually, this one, you're going to get washed out on that. Nothing is perfect, but then invariably it sets up again with your stop beneath the low, which puts you into a double bottom as it sets up again. before it runs, okay? And then we see it running up before it comes back down here, closes beneath the 50 before the next candle, it closes back above the 50, you're long, okay, before you're doing. And that's what we just, you're just looking to sort of, when there's a good trend like that, you're just looking to be able to take there. So, there's what, 1, 2, 3, 4, 5, what is it? 1, 2, 3, 4, 5, 6, 7, 8, 8 trades, okay, of which in that particular case, all right, there were 2 losing trades, 6 winning trades, okay. It's not always like that, but this is, when you get a good trend, as I said, don't fight it. You're just looking for it to be a way to sort of surf and ride that wave if you possibly can. So, this was, example from pound against US dollar in terms of, hopefully, as I said, you can see it's basically, it's a, price basically is it's just grinding its way up. It's above the moving averages, which are in alignment. We get a blow off. Price kind of falls back, gets beneath the 50 period moving average, and then it closes back above it. You're long, okay, with your stop beneath, that kind of recent low. You're into it, and that trade runs, okay. That's what we're looking for. Just keep it nice and keep it nice and simple. So here's a few points for success. I appreciate sort of time is of the essence. There's a few points for success, okay. Cut your losing trades quickly, right? This is very good, important about, trade management, risk management, okay. Same with the lack of momentum trades. This is supposed to be a scalp, all right? So if it's not running for you, if it's not going your way, remember we talked about kind of like the angles, if if it's too shallow, call the trade, okay? Call the trade. We're expecting price to come up, okay? Test and momentum to reemerge, the trend to reemerge. That's what we're looking to utilize to get ourselves a few. Do not be surprised to have a good few scratch trades, okay? It's not unusual to have, a good few scratch trades, and you might find what will happen is, you might have like, a 40% hit rate, but then your next 20 to 30%, okay, is actually a scratch trade, okay? Maybe 1 pip here, 1 pip there, because actually as you move with that. Don't be surprised also to, as I said, have a few scratch trades and then have a couple of strong winners, okay? It's your job as a trader to put the trade on. The market will decide when and if you get paid. Losing trades can help pinpoint a market reversal. I try to stress to people that, the market is always communicating to you. If you've had a losing trade, you have just paid for some information from the market, and that might actually utilize, other opportunities for you, which you can use to recover your particular, if you've had a couple of losses. So in conclusion, ladies and gentlemen, right, some points we've learned from trading and scalping the GBP. GBP is a popular trading instrument because it's still based on London's location as #1 for FX. Traders like it because it's volatile, can have strong trends, and has good sized moves. But that volatility, can be a blessing and a curse. When it's trending, trade with the trend. Okay, don't fight it, surf it. When it's range bound, look for reversals. Just the thing to remind, most UK news items are released at around about 9:30 a.m. UK time. Make sure you're out of your intraday and scalping positions by then. Don't be trying to trade into or around that. Look for sometimes differences between the 7 a.m. Frankfurt Open, the 8 a.m. London Open, because actually what you might see is there might be a swing one way and then a swing the other. When it comes to scalping, look at how the markets react once they have broken the Asian range. That's a useful nugget to sort of take away and look at. As I said, most news is at 9:30. Make sure you're out. Also, if you are going to trade in the afternoon, be aware of the London fix, okay, which is around about 4 o'clock. If you're trading the GBP in the afternoon, you should be aware of that because there can be some maneuvers before and after that. Patience and discipline become even more important when you're scalping, and practice makes perfect. Okay, it's a case that you can try this on the Admirals demo platforms. Okay, just working away that, just practice it. It might be a little bit frustrating to begin with because you're just getting used to it, getting ready to operate at that pace and that speed. But practice makes perfect, ladies and gentlemen. So I will just snap in a couple of minutes, okay, on the charts. It's a bit of an interesting day, but before that, don't forget to join me on Wednesday, where I'm going to talk about some simple trading strategies for beginners to take away and utilize in 2022, including different types of trading methods available, how to decide which one suits you, and how to trade through different trading environments and methods, which is one thing we've been experiencing over the last week or two. So that is 2 o'clock, Wednesday, 8th of December. Check your inbox for the webinar link or sign up on the website. If you want to get in touch with us, you can. You can go to admiralmarkets.com. You can sort of see there at global@admiralmarkets.com if you want to drop us an email. So we've got a couple of minutes. We've overrun by just a couple of minutes, but as I said, I'm always trying to get as much information as I can across to you. So I apologize for that. So please bear with me. Just for a minute or two, we'll just literally have a quick look just to see what has gone on this afternoon on some of these GBP sterling actions. So just bear with us a moment and we'll switch across. Okay, so I'm hoping you can see my chart. You still see me. You know what we have had. You know when I'm doing this. Okay, we've had NFP this afternoon, so there's always a bit of volatility. You know, trading around news like that, trying to even scalp. You know, I don't suggest, but I said I want to have a little look at pound against Swiss franc, didn't I? Let's have a look here. You can see here I've just got a profile here, and you know. What I'm looking at is got euro sterling, pound against dollar, okay, pound against Swiss franc. So this green session is another element of the I session. I'm looking into basically where it's going to going into the US session, and what we can see is those elements weren't really in alignment, and now what we've got is we've got a real post NFP run there, haven't we? That's quite something. There's clearly a bit of a Swiss franc reaction to those numbers, which I don't believe were that great. Okay, from what I remembered, but just quickly looking at before we came on. But what we can do here, let's see if we've got this. Take this off. Let's go here. Is that not unsurprisingly the kind of here we go. Let's zoom just back here. Yeah, that's good, because what you can hopefully see here, pound Swiss today. What we had was actually quite a few swings here, okay, onto the south side, okay. What we can see is that price actually sort of here price had pushed up above, but the moving averages aren't in alignment, but they do. Price comes down, price basically rallies up, and we can see how it it closes above the 50, actually goes all the way to the 200, but the moving averages are in alignment, and then basically click, okay. It recloses beneath the 50, and there's quite easily your 5 pip or even an awful lot more pips, okay, depending on how aggressive you are. Price rallies back up, okay. Effectively, it's starting to close back up above the 50, and then what happens is it recloses, okay. It recloses beneath the 50 again. That is a preferable setup before actually it puts in another one, which is a kind of a big candle before it dropped again. And then we see price basically had it swung way before it actually came back and reversed down here beneath the 50, where the moving averages are still in alignment. Okay, just effectively had a little bit of a move before a stronger move, and then as I was saying here, what actually happened here is very quickly, just to finish, is price kind of had a shallow run back up. It closed above the 50, and then it closed above it, and then it closed back beneath it, and normally that would be a trade. You can see that trade failed, but here what we're about 40 minutes before the US NFP numbers. So as I said, just before those big news announcements, it's not unsurprising to see markets get a little bit either quite volatile as people are positioning themselves, or very, very, very quiet, okay, very scratchy as everybody sort of just sits back and waits for the news to be announced. But hopefully you can see that, yeah, there's quite a few swings there, okay, on the pound against the Swiss franc. That's the kind of what we're particularly looking for, all right, even there, just looking, in a couple of hours, there's a couple of trade opportunities for you there that are quite clean, okay. Don't as I said, don't look to try and fight it. Don't look to try and to feel that you need to sort of force the trade. That rarely works. Cool. So I apologize, ladies and gentlemen. I've overrun a little bit, but as I said, I'm always trying to get as much information as I can across to you, okay? So, and as I said, you know, this is recorded and it'll be out next week, okay, on the Admirals YouTube channel, so be sure to have a look at that. If you are looking on the Admirals YouTube channel, okay, be sure to sort of, you know, subscribe, okay, and follow. You might want to rewatch it a few times, take some notes, okay? You know, as I said, it's a simple visual tactic, but practice makes perfect, ladies and gentlemen. Well, you know, all that remains for me is to say, you know, it'd be great to speak to you. I wish you the best of success in your own trading endeavors, ladies and gentlemen. Have a great trading week, and I'll speak to you soon. Take care.